window.
Hello traders, Gary Wagner with the Gold Forecast here. Approximately 10:45 in Honolulu, Hawaii AM. It is Monday, the 6th day of June, and this is the daily report for gold. What a interesting trading day we've had. It was trading quietly as it started overseas yesterday. We did our report. It was up a couple of dollars. It went up about $4 shortly thereafter. Following that, through the night, we saw the market rise and, in fact, trade about $10 higher on the day, only to go close to unchanged. As we go into the close, we've got about 30 minutes left before the what I call the afternoon break. Of course, it is the evening session as it breaks. We are trading up about $2.30. And as you can see, we are currently looking at a daily chart. And you can see that it's almost a shooting star-like candle. It is not quite a shooting star, but you can see that it's got that tail that comes in right in here, and then, of course, a small body right below it. Now, typically on a shooting star, for a shooting star really to be considered a shooting star, you need to have that tail at least twice to three times the length of the body itself. So if we would look at something like this, for example, with a much larger tail, I'm kind of exaggerating it a little bit, and this, you get the idea of what we're talking about when we're talking about the shooting star itself. Now, in terms of the marketplace itself, my sentiment is we've seen a nice move. We haven't seen any real hard retracements or corrections. We've had periods of consolidation. We've then had the market move up, but we haven't really seen anything strong. It certainly seems as though, and this is what we talked about last week, that it looks like it's building a base. Now, we are in at 1488. We have a stop well below that, and I think it's time for us to start looking to raise the stop. Now, we had this low last week. This came in right at around 1518. As you can see, that was this low right in here. Any stop is going to have to be below this particular point here. I personally think that we have very, very good support right now at 1530. We talked about that on yesterday's show. So I believe by moving a stop to 1510, we should be safe. Now, realize one of the reasons that I have been reluctant to move this stop up was that as the market trades and you get these wild swings within the market, I do not want to get knocked out and just simply watch that market trade the other way. On the other hand, if we have this market sell off hard, I want to be able to lock in some of our profits. Therefore, my recommendation, I'll put this in as a trade alert, but we're going to move our stop to 1510. You can move it to 1509, 1510, somewhere in that area. My sentiment is that that should hold, because we're putting it well below this series of lows right in here, and that's what I want to accomplish. In other words, we should have a solid band of support. If we don't, that market's going to be breaking down fairly hard. If we see the market come under pressure, we might in fact want to take that to the market itself. But for right now, my recommendation is to trail our stop to 1509, 1510 on a protective stop. Now, when we go ahead and compress it, you can see this one candlestick, and it does appear more shooting star-like as we kind of compress that and take a look at the market in this way, where we've gone ahead and compressed this data so that we get more candles within the bar itself. And the other reason that I am starting to have a little bit of concern about how it's reacting in this particular area, this is a 628-minute chart, so that it does in fact break up this particular day into a couple of bars. And you can see that when we take a look at it, this is that one stab that it made. But here is what I am finding interesting, and that is the stab that it took and was unable to hold is at what I consider to be a fairly critical resistance area, that area being 1549.97, so call it 1550. I really do believe that 1550 is some resistance, and because of that, my sentiment is that we might, if we are going to see a pullback, in other words, if we are going to see the secondary part, the corrective part of this 5 wave, larger wave 5, us being already in 1, this being 1 right in here, my sentiment is that if it cannot take this area out and close above it over the next couple of days, we will in fact see this market come back down for the corrective part. Does that mean that the cycle's over? No. I think that we're going to witness, as I said, a complex wave composed of 5, a wave count of 5. So that what we would be looking for, of course, is the market to come back down. It will probably test anywhere between 511 and 528. So somewhere between here as a correction, and then begin to move higher like that. The other thing is that, of course, the market might be able to genuinely take this resistance area out. So for that reason, I'm not looking to tighten the stop up very, very tight and to see how it reacts there. I've also tried to place our stop in such a place that it will allow us to weather a corrective move down and then ride that up, because my sentiment is still that this particular full wave of 5 should take us to a new record high, the old one being 77. So we are still a good $22 or so away from that. My sentiment is that we'll probably see a high and a testing of 1600. That's my personal opinion, and there's been nothing that I have noticed that will cause me to change that at this point. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.